Assalamu alaikum friends. How are you? Hope all of you are doing good. I'm also fine. Starting with reconstructions and reorganization. This was the only topic which is left for AFM. I have completed all the other areas, risk management, both exchange and interest rate risk. Then I have covered the acquisition and merger. Then I have covered investment appraisal, net present value and adjusted present value, and I have covered I think around few theories, two or three theory questions I have did. I've showed you how to write a theory question. But definitely good news for all those who have been struggling with theory part. How to write a theory part, okay? How to answer. So I will be coming up with a video very soon, shortly, on how to write a theory part. Basically where I will be taking you through an insight of the same question will be attempted by three candidates. One answer will be poor, the other one will be average, and the other one will be the best answer. Okay, so I will take you through that, and then most of you will have an idea on how to write theory part. Okay, so now starting with reconstructions and reorganization, this question is from June 2019, question 3, reconstruction and reorganization. The reason why I have chose this topic at the end, because this is one of the area, it's like a dry area, I would say, not very much of interest. Students don't like this area, they don't study this area much, they always leave it towards the end. Okay, but it's very important that I include this, because without reconstruction and reorganization your syllabus is incomplete. Okay, so I'm going to start with the requirements. Part A discusses the advantages and disadvantages of demerging. So I'm not going to cover this in this video. This is something which should be easy, right? It's just your textbook knowledge of knowing the advantages and disadvantages and applying it to the sportswear division. Okay, part B. My focus is basically on part B. I'll be covering part B here. Okay, so changes in the weighted average cost of capital of new member company if the demerger of the sportswear division takes place. Number one. Second, valuation of the Points company using free cash flow based on the information and assumptions given, and briefly discuss your results. Two things we need to cover. Now, you need to understand this very clearly, that reconstruction is very similar to your acquisition and merger. Okay, whatever you have done in acquisition and merger, demerger is the opposite of it. Acquisition and merger is where two companies join and become one combined company. What do we do there? We find the valuation of the combined company, right? We find a cost of capital for the combined company, WACC. Reconstruction and reorganization also, we have to find a new WACC. Your cost of capital changes. Okay, your cost of capital changes when you demerge. One company becoming two. You are selling off. There you are buying a company. In the merger, here you are selling off the company. Okay, that's why this topic I have taken after acquisition and merger, because when you're studying, study acquisition and merger first and then reconstruction. It will be much easier for you to understand it. Okay, and the second one is valuation of using free cash flow. Free cash flow is also an area I have seen is very repeatedly asked. You should know it. Whether it's for acquisition and merger, this can come in acquisition and merger, this can come in reconstruction also, free cash flow. So make sure that you know how to value a company using free cash flow. Valuation of Points company, this is basically valuation of company. So these are some of the common areas which is asked in reconstruction. What are they? To find cost of capital, to find the valuation of the company using whatever method, they will give the method. Okay, in this case they have clearly told is free cash flow. Okay, or another area could be to show the impact on the financial statements, where you have to drop the financial statements. They will be giving you some reconstruction schemes. Based on that, one or two or three, you have to drop your income statement and balance sheet. That could be another area, but that's not asked here. Okay, but you have to be prepared for that as well. And part C discuss the factor which may determine the policies the company should adopt for communication of information to shareholders and other significant stakeholders. I'm definitely not going to answer it, but I'm going to show the points. What are the points you can write for it? Okay, so now let's start with going to this member company. Okay, so definitely this is all basically they're talking about what's happening in the operation department, what's happening in the company, how they have been performing, and all those things in this paragraph. First paragraph, the first introduction. Okay, they are saying 70% of shares are owned by directors and relatives, 30% is by external investors. And this is in the formal clothing and adults and children. Okay, you need to know in which division, because in reconstruction and reorganization they give you 2-3 divisions they give you. Okay, so it's very important that you know how to work along with the divisions. 2-3 divisions they will give you. So when they give information, they will be giving information about 2-3 divisions. Sometimes it's just one division, but sometimes it's more than one. Okay, so either you can read line by line or you can just skip through it. Okay, because basically there are no numbers here. I can see no numbers, so definitely this all are just some theory but giving introduction. What about it? Restructuring. This is what are they saying? This you need to read. Okay, so a few months ago the management of the sportswear division approached New Board with proposal of management buyout. This is the term. This all these terms will be used. Okay, you have to know what is management buyout or management buy-in, all these terms for restructuring of the sportswear division. However, what is management buyout? First understand that what is management buyout. Hmm? Management buyout is you are selling your division to the existing manager, the manager who has been working in your company. The shareholders are selling it to their managers, that part of the division, sportswear division. Okay, that is known as management buyout. The management is buying it from you. However, the price the sportswear division's management was able to offer was insufficient to persuade the company board to sell the sportswear division to them because they were not able to afford it. So, newcomer board has subsequently decided the sportswear division should be demerged into a new company. What is that name of that company is known as this? Demerged into a new. Sorry. Now, if you see one thing, when I was going through this, did you see the speed at which I'm reading or I'm skipping through it? How do I skip? How do I know which areas to skip, which areas to read? Again, experience is needed. When you have done enough 10-20 questions on restructuring in the past from the past paper and revision kit, you will know that what could be there. Through experience, you know what is there in the introduction, okay, from which areas I need to pick. So it is there in your subconscious mind. You don't have to read every time line by line. So this saves a lot of time. That's why practice is required. It's very important. In all ACCA papers like that, they follow the same pattern only. How the information will be presented to you for restructuring. Okay. So this saves a lot of time. Okay. So the shareholders and proportion of shares held would be same. This is very important. The shareholders and proportion of shares held would be same for ones as currently for the new company. This is very important. The shares, it will be same for the demerged company as it was before demerged. Okay, for the new member company. The sportswear division senior management team would become the board of this one and Pointless company with an immediate listing on the same stock exchange as new member company. Okay. Next, financial information. So we know that all the things which we need for our calculation is in the financial information exhibit 3. So definitely this is going to be very important. Okay, I'm going to zoom this out. The market capitalization of share capital is currently 585 million. It is 585 million. Newcomer also currently has 200 million. Okay, I'm not going to underline each word because then in that case everything will be underlined. Okay, but make sure that you remember the number. If you don't remember, you can always keep this in front of you. Okay, you don't have to memorize numbers and all when you are doing the requirements. So new member has also currently has 200 million 5.9% loan notes. If you can see, this type of information is given for you to find what market value of debt. Market value of debt. Now sometimes debt also more than one type of debt they might give you. They might give you 2-3 types of debt. What should you do in that case? You have to first find the value of each debt separately and then add all the three. That's how you get the market value of debt. But for market value of equity, it is always one only. Okay, one equity. So the loan notes, okay, okay. If you want, you can underline this. This is for new member. So definitely through experience, we know when you're reading restructuring, definitely they will always give about new member company first. About demerger information will come at the end. Okay. So the loan notes are redeemable in 5 years time at a premium of 5%. Okay. This is they are giving you to find the market value. Otherwise, how will you value? The way you value your debt depends whether your loan is redeemable or irredeemable. The valuations are different. Make sure that you learn both, because this is not just getting the right answer. This video is also a revision for you. Okay. The same applies for acquisition also. When you have to value your loan, if it's redeemable, valuation is different. If it's irredeemable, things become much easier. But most of the time, they will be giving you redeemable, because there you need workings and all. Irredeemable, just working is not required, just one formula and then you will get it. Okay, at a premium of 5%. New member companies equity beta is currently estimated at 4.4. Equity beta is very important. Now, why equity beta is given? Even for acquisition and merger also, you see the same thing, same way. It's like you're doing an acquisition and merger question, but here it is demerged, not merged. That's what you have to understand. So equity beta is estimated at 1.4. The equity beta is given you to do what? To find cost of capital. To find cost of capital. You need cost of capital, otherwise how will you discount the free cash flow? Understood? Are you understanding that logic now, that sequence? Equity beta is needed to find cost of capital. Cost of capital you need to discount your free cash flow. Otherwise, how will you find the value of the demerged company, right? So new companies, cost of equity. Here they have given you the cost of equity, current cost of equity. That means you have to find the new cost of equity. Current is already given. So current cost of equity and current before tax cost of debt. Okay. 11.8 and 4.5%. The asset beta of the formal clothing division. Usually when financial information is there, I request students, financial information whenever it's given, whether it's acquisition or merger, whether it's investment appraisal, whether it's reconstruction, whatever it is, whatever topic it is, always read it in full, line by line. There you cannot skip. You cannot skip there. There if you skip, then you might miss one number out. Then all your calculation becomes wrong. Skipping is only allowed in such areas where all theory parts are written. All background information about a company and all. Because when you're writing a report or when you have to comment, there you need this information. There you have to read it. But when you're doing financial calculations and all, you don't need all this. So the asset beta of the formal clothing division is estimated to be 1.21. Clothing division, if you see, they have given the division. One is clothing division, one is sports division. Why they have given the asset beta? Because now you have to find separately the cost of capital for each division, clothing and this one. The weighting, definitely they will give you the weighting. In estimating newcomers, overall asset beta is 60% for the formal and 40% for sportswear division. The debt beta is always zero only. Okay, it doesn't be. Next, in return for 40% of issued share capital of Newber, its current shareholders will receive 100% of issued share capital of Poinus. Okay, corresponding to the assets and liabilities being transferred. This is also very important. Okay, what does it mean? That you are giving 40% of your issued share capital to Newber to get 100% shares of Poinins. The shares in new member which shareholders have given up will be cancelled. You have to be prepared for this. Okay, shares might be changed to debt might be changed to shares might be cancelled, debt might be cancelled. All these things will come in reconstruction. Like in this case, shares in new company which shareholders have given up will be cancelled. So if you see, this is what happens when I come to highlight. Everything will be highlighted. After the demerger, the new market capitalization can be assumed to be 351 million after demerging. Okay. New market capitalization is 351 million. Okay, if you have seen before demerger they have given 585. Now it is 351. Pointers will have no long-term debt. Okay, no long-term debt. Which company? The demerged company. No long-term debt. The liability for the 200 million loan notes remaining with new member. Okay, I'm not highlighting it. Just keep otherwise everything will be highlighted. Current risk-free rate. Definitely this is your capital asset pricing model for you to find the cost of equity. That's why they will give you the risk-free rate, they will give you the market risk premium, and they will give you the tax rate also. Applicable to all companies, the tax is same. Sportswear division currently has definitely they will give information about which division, the division which you are going to sell off. They will give you separate information because they told free cash. See in the requirement itself they told using free cash flow. Definitely they will give you free cash flows. They will give the cash flow of the pointers. So that is this only. They have given you 1, 2, 3, 4 year onwards. Okay, what did they say? The sportswear division currently has 36 million operating cash flow. Its managers believe that operating cash flow can increase by the following rate. So it will keep on increasing. Okay. So definitely 2 is there. 4 onwards. This means that you have to calculate terminal value also. Same thing applies for acquisition and merger if you see. Same. Dicto it is. Everything is same. Only few things are different. The difference is this is demerged. You are selling off, not combining. And another area is here you will have all this thing. Shares will be cancelled, debt might be cancelled, shares might be changed to debt, debt might be changed to shares. Okay, that thing is there in reconstruction. Reconstruction is basically you are changing, right? So with this, now the question comes, how do I start? From which part? My first question is to find WACC, cost of capital. How do I start? Always start with the current. Always start with the current WACC before you find for the new company. Okay. Because the question asks the change in the weighted average cost of capital of new member if the demerger of sportswear division takes place. The change means you definitely have to find before and after, then only you will be able to find the change. Okay, whenever the word says change or a new WACC does not mean only new WACC, you have to find the WACC before also, always. Whenever cost of capital to, if you have to find cost of capital, even under acquisition merger, even under reconstruction. Okay, and for this you can either use Word, you can either use Excel, or using Excel, find out the value, copy paste to Word, anything you can do. Okay, let us use Excel spreadsheet for that. Okay, but I'm definitely going to write this. Okay, so basically the main answers I'm going to write in Word. I'm going to do my workings in spreadsheet because calculation is required here. Okay, current WACC, name the company because there are two companies now. New member company. Okay, current WACC. You have to write whether it's a new WACC or a current WACC. Don't just write WACC because it is not understood whether it's the new WACC or the old WACC. Okay. Next, wherever information is directly given to you, first write all those pieces of information. Like you have been given the cost of equity and cost of debt, but WACC you are not given. Okay. So K, sorry, I will just remove the bold. KE. Okay. So the cost of equity is, they have given you already 11.8%. I don't think I have to go and show you that, but still if you want, it is this 11.8%, and cost of debt 4.5%. Okay, keep the exhibit 3 in front of you because I will not be opening the exhibit each time and showing you the figure. And KD is 4.5%. This is before tax. Okay, now what is the next thing? You don't have to do anything with cost of equity. Okay. What do you have to find out? You have to find the market value of debt only. Market value of debt is required. See, cost of equity is given, market value of equity is also given. If you see the financial information, this 585 is your market value of equity only. Market capitalization of share means market value of equity. Okay. Sometimes they give market value of share price, like they will give a share price and they will give you number of shares. Then you multiply and find. Sometimes they will just give you the total value, like in this case, 585. So market value of equity and cost of equity is already given. Cost of debt is also given. What else to find? What do you need in that WACC formula? You need market value of debt. Market value of debt. So next thing is market value of debt you have to find out. To find market value of debt, what all things you need? Decide that. This is how you think, okay? This is your thinking process. You are not going to write, okay? This all I need and all those things. Market value of debt, what all you need. Look at debt. First of all, understand what type of debt it is. It is a loan note which is redeemable in 5 years time. So if a loan is there, definitely interest is there. Interest is there, you are paying for 5 years. What do you need? Annuity factor. Annuity factor is needed because you are paying the interest for the 5 years. Same interest. You need a discount factor, you need an annuity factor for the loan. Okay. So annuity factor. What is the annuity factor? It will be at 4.5%. Always at the cost of debt. For how many years? Write it for how many years? 5 years. It is redeemable for 5 years. Okay, equal to. What is it? You can use Excel here to do it. I'm going to do annuity factor for 5 years at 4.5%. Just okay. Annuity factor for 5 years at 4.5%. What am I going to do? This you have to do it manually if you see. Why? If you go to formula sheet, let's open the formula sheet and see the annuity factor. If you see the annuity factor, it is in whole number. There is no annuity factor for 4.5%. Either you have 4, either you have 5. That's why you need to know how to find the annuity factor. Manually also you should know how to do it. How do you do it manually? It is simple. Just go. The formula is given already here. On the top they have given you the formula. So in case you forgot the formula, you can use it. 1 minus 1 plus r to the power minus and divide by r. And what is r? Discount rate. That is 4.5%. What is n? Number of periods. So we are exactly going to use that formula here. Okay. So here equal to, either you can use your calculator to do this. So 1 minus bracket, but you need to put the equal sign, otherwise it will not perform the calculation. Okay, first is 1 minus 1 plus 4.5%. 4.5%. Close the bracket. To the power minus 5. Now how do you write to the power? You press shift and number 6. You will show this arrow sign, little arrow. Small arrow will be shown on the screen. Okay, that means now you are writing to the power. Minus, okay, write minus 5 years. Okay, then divide by 4.5%. Close bracket. Enter. If you press enter, it didn't come. Why? If you see, it didn't come. Equal to 1 minus 1 plus 4.5%. Close bracket. The reason why, because I put the bracket 2 times. Here I have closed bracket. At the end also I have put a bracket again. That's why. Minus 5. Divide by 4.5%. Enter. So now you put enter. Expand it. definitely something is wrong. It cannot be a minus. So this means something is wrong with your calculation. Wait, just let me do this. Okay, so you can do this step by step. Okay, when you put to the power minus 5, when you divide it, what happens? You put it to the minus 5 and keep as it is. Later you go here and divide this by 4.5%. That means you are not doing this in one go. You are doing it in two steps. If you are doing it in one go, you are making mistake, that's why. But let me see why it is not coming. Okay, this is what's happening. If you divide it by 4.5% in this line only, you will have a negative figure. Why? Why is it so? But anyway, let me put a bracket and see. Okay, divide by 4.5%. Now let me see. Okay, so you can do this in one go also. Okay, how? Go here and see. 1 minus 1 plus 4.5. You have to put bracket. Okay, you have to be very careful where you are putting your bracket if you are using Excel. This is why I prefer use your calculator also if you want to check whether your answer is correct or not. Okay, 1 plus 4.5% to the power minus 5. Then you have to close your bracket. You directly cannot just divide by 4.5%. Okay, then 4.5% and enter. Definitely it will be at this range also. Another way to check whether this is correct or not, just open your formula and just look at 4 and 5%. Look at the 5-year annuity factor. Okay, it is 4.45 to 4.329. Okay, so definitely it will be within this range. It will be between 4.452 to 4.329. Okay, so this range is between this two figure. Another thing is you can use a calculator. Okay, I'm going to show you the calculator because it's important that you know all the ways to do a calculation. In case you are lost somewhere or in case you're stuck in Excel, you don't know how to do it. You should know an alternative way to do it. You should do this techniques. Okay, now I'm going to do the same. Okay, this one only. Same thing I'm going to do it in the calculator. You can break it down or you can do step by step. Okay. 1 minus, again bracket, 1 plus. Okay. I don't have a percentage sign here. So here I cannot put 4.5%. Here I have to put 0.045. Okay. 0.045. Close bracket. To the power, the arrow is there. Okay. To the power, when you put that, put this minus. Okay. Not this one. This one. This minus to the power 5. Okay. Now you need to close the bracket. You cannot put a bracket here like this. It will put the bracket to the power minus 5. So you need to put this arrow. This needs to come down. Okay. Then you close the bracket like this. Then you divide this by 0.045. Press enter. Something something is wrong, right? Definitely something in the calculator is wrong. Again we'll do this. One minus 1 plus 0. You can type. Okay. To the power minus 5. Close the bracket. Okay. Divide 0.045. 045. Sorry. Oh. 1 minus 1 plus 0.045 to the power minus 5. This is the reason why this is happening is because I'm typing, okay? Close bracket, divide by 0.045. So if you see it's showing error, okay? So what can you do? Now you can do this in step by step if you want. Okay, 1 minus 1 plus 0.045, close the bracket, to the power minus 5. Enter. Divide this by 4.5%. Now you'll be getting this. Okay. But let us try once more to do it in one go. Okay. So it will be, this time I'm not putting a bracket before 1, to the power minus 5. Now I'm dividing this by 0.045. Enter. You see, that's what we got in the Excel. So just delete this. Okay. So you can either do step by step in one go. Okay. 1 minus 1 plus 0.045 to the power minus 5. What happened when I do it? And then divide by 0.045. Enter. Right? It's showing a syntax error. So don't do it in one go. If you're not getting it, and waste time to do it in one go. If you cannot, then break it down. Just do this part first and then divide by 4.5%. That is 0.045. But definitely this, if you check it with the table of 4 and 5%, this should help you. You don't need a calculator. But in case if you want to use your calculator, some of you might be using calculator rather than Excel. So you can do that. Okay, this, if you see all the annuity factor table, the numbers are, it is taken in 3 decimal places. So I'm now going to round this up. Okay, round, click the number, comma 3. If it's 3 decimal places, then it's comma 3. Okay, I'm sorry, just put 4. No, it is 3 only, I'm sorry. The reason why they are showing it, okay, you can go here and put this. You are not able to show it in 3 decimal places. Okay, you don't have the thing to show it in 3 decimal places if there's a 0 at the end. Okay, like 4.390, they will show it as 4.39 only. Okay, but it does not matter. Okay, 4.3 or 4.390 is the same thing only. Next, once you get the annuity factor, what else do you need? Now you have to find the value of the loan. So loan, you start like this. Loan value per $100. Okay, it is always given as per 100 only. Write a description on one and do the calculation on the other cell. This is a long calculation. Okay, you can either do it step by step or you can do it in one go. Okay, if you are doing this in one go, it will be like this. Let us open the financial information. Okay, if you see the loan note is 5.9% from of 200 million, that means what? Interest. Your interest is 5.9. Okay, how do you find interest? It's always given like this, 5.9% loan note. So whatever that percentage is given before the loan note, that is your interest. Okay, and when you're finding the principal amount, it's not 100. The normal value is 100, but here they have told that it is at a premium of 5%. That's why when you're taking it, it will be 105, the principal amount. Okay, and the discounting factor will be what? Not 5.9%. Discounting factor will be 4.5%. Okay, this is for the interest. So don't get confused between the three numbers. Okay, now it will be 5.9. 5.9, this is the interest. Okay, multiply this by what rate? This rate, annuity factor, because for 5 years you are paying the interest. Okay, this, so close bracket, plus, again put bracket, I have told you principal amount is 105 because issued at discount. Multiply by what? Multiply by the discount factor for 4.5%. Now look at the formula. If you go to the discount factor also, it is either 4 5%. It's not given, but you can use it through formula. This formula, 1 plus r to the power minus n. If for such calculations where it's in decimal number, you can use that formula. Okay, I'm also going to use that formula now. 105 into what? 1.045 because 4.5% to the power minus 5 because 5 years. You need to discount it back to 0. Okay, you have to use the 5th year's discount factor. That's why to the power minus 5. Close bracket, enter. So if you see this, you can do it in one go like this, or you can do it in the calculator also. But I don't think in the calculator I have to show you because this is something, it's easy calculation. Or if you want, you can do this step by step. Okay, here you can do the interest part, here you can do the principal part and do the sum function and add both and fine. But I prefer, if you can do it in one go, it's better to do it in one go because this saves a lot of time. Now I'm going to round this also to 2 decimal places. Okay, this comma 2, 110.116. So now what am I going to do? Now comes the MV. You don't have to write the whole market value. If you just write MV, it is understood. MVD, that you are finding the market value of debt. Okay, so market value of debt will be what? Equal to whatever the value, loan value per 100 you found, always this, always divide by 100. Okay, multiply by what? 200 loan. Okay, don't do it the other way around. I have seen some students, what they do, they do 200 divided by 100 multiply by this rate. No, this is the price per 100. That means for one, it will be 110.16 divided by 100. That's why we are dividing it by 100 to find the price of one loan. And how many loans we have? 200 million loans. That's why we are multiplying by 200 loans. This is the logic behind this. Okay, enter. 220.32. 220.32. This also you can take the whole amount. It's better that you take this to whole amount. Either you can do it manually 200 or you can use the function and do this. How do you round up to whole decimal place? Comma, just 0. Okay, 220. So the market value of debt is 220. All these things you don't have to copy paste in the Word. What you have to copy paste in the Word is the WACC. Okay, the question asked, the requirement asked what? Let me open the change in the WACC. So that change, current, new, the two WACCs you need to take in the word processor. All this working is not required. You can keep it in the Excel. So now the next one will be what? WACC. WACC is simply what? Cost of equity into market value of equity plus cost of debt into market value of debt into 1 minus tax rate, tax ratio. This also you can do step by step. You can first find the cost of equity plus cost of debt, or you can just simply take it in one go. Okay, I'm going to show you both the ways. Now it's up to you what you want to do. I'm going to show you both the ways of doing it. The first method, I'm going to do this in one go. Equal to, what is the market value of equity? It was given as 585. Multiply by, what was the cost of equity? 11.8%. Okay. Plus, comma. What is the market debt? Just now we got 220. Multiply by. Okay. 4.5% because that is the cost of debt. Into, after tax, tax is what? 28%. After tax it will be 1 minus 28. So 72%. You can take 72% or 0.72. Now you need to divide the whole thing. Okay, you cannot divide it like this. If you divide it, it will only take the division on this part. You need to divide the whole thing by market value of equity plus market value of debt. So just press enter. Okay, now divide this by market value of equity plus market value of debt. That is 585 plus 220. Okay, put bracket 585 plus 220, 0.9. So if you want to take this here, or you can take this in terms of percentage, one decimal place you want to round up, it will be 9.5%. Okay, or what you can do is, in the word processor, since you have written this 11.8 and 4.5%, you can write all this here: market value of equity, market value of debt. Okay, so this is, you are doing it in one go, everything. The other way is you can write all this. That means I'm going to wipe this out. So market value of debt is there, cost of debt. Okay, so now I'm going to write KD, cost of debt, as 4.5%. 4.5 percent. I'm going to write the market value of equity also, which is 585. I'm going to write the cost of equity also. What was the cost of equity? So rather than writing in the word, you can write there 11.8%. 11.8%. Okay, so now when I'm going to do the WACC, okay, also you can take the after tax cost of debt. After tax it will be what? 72%, because the tax rate is what? 28. So after tax also you can take. And the total value. Total value means debt plus equity only. So equal to your this plus this. You need it in the denominator. So now you can do the WACC. You're basically writing all the variables and then you're doing the WACC. Okay, doing the WACC here. Equal to market value of equity into cost of equity. Okay, I cannot divide the whole thing. I'm going to divide individually. Total value. Okay, plus press the space bar and then add cost of market, sorry, put a bracket also. Market value of debt multiply by cost of debt multiply by 1 minus tax rate, which is 72%. Close bracket, divide this also by 805. Present. And take this in percentage to one decimal place, you will be getting the same answer. Did you see this? So you can do it like this also. And find the WACC. 9.5%. So when you're writing in the word processor, all these are not needed. What you can do is current WACC, you can write 9.5%. You can write it like this. But you have to write the requirements also. Which requirement is this? It is B. Okay? B. So you can write like this. Definitely you don't have to write the formula, okay? Because when you click here, they can see the formula, what all you have taken. But you can write all this. And this is better actually in case you made a mistake somewhere, so you made a change and this answer automatically will change. If you are inputting the answer one by one in one go, then there's a risk that if one area you go wrong, you will not be able to find out what went wrong. Okay, so it's better that you put all this and then do it like this. Next, current WACC is over, now new WACC. Okay, so new WACC, new member company. Okay, now the new WACC. Just write the name. Okay, new. Okay, so now they have already given you wait, just bold it out. Market value of equity they have already given to you. It is what? 351. I'm going to write here 351. Okay, 351 million. Now here you cannot just find cost of equity and multiply. Why? Because cost of equity itself you have to find out. Here already they have given you this 11.8%. Here they didn't give you. You need to find out that cost of equity. So whether it's investment appraisal, whether it's acquisition and merger, whether it's reconstruction, all the three areas you need to find. You should know how to find cost of equity, cost of debt, or WACC. It could be asked in any area of the syllabus. That's why you should know this re-gearing, ungearing, all those things. It can be asked in any question. You cannot escape, in short. If it's not asked in reconstruction, it might be asked in acquisition. If it is not asked in acquisition, it might be asked in investment appraisal. In short, it will be asked. Anyhow, there's no escape from that. So, to find cost of equity, the starting point is equity beta. Okay. Sorry, let us go to the financial information. If you see here, did they give you any equity beta? They told that the new members equity beta currently is estimated at 1.4%. But you need to find the new equity beta. What are you going to do with the current equity beta? Can you use this to find the cost of equity? The current equity beta? You cannot. You need to find the new equity beta. How do you find the new equity beta? By using what? Asset beta. Because asset beta they have given you. Just look. Asset beta 1.21, 60 for this division, 40% for this division. By using asset beta, find the new equity beta. You cannot use this equity beta. New members equity beta is currently estimated at 1.4. No, you are finding the new WACC. For new WACC, you need new equity beta. To find new equity beta, you need to use asset beta, which is given. Any question, this is the same sequence, same way you do. There is no difference. How you find WACC in cost in acquisition, merger versus reconstruction or versus investment appraisal. So my next thing will be to find cost of equity. Sorry, equity beta. Okay, either you can write equity beta, okay, because you don't have that symbol of beta. So just write equity beta. Okay. Make sure you know the formula. If you don't know the formula, let us go to the formula and see what is the formula for equity beta. It is given. What is it? Just wait a minute. So here they give you the formula for equity beta. Asset beta, sorry, asset beta. This. Forget about this part. This part is not needed. This you are using to find asset beta. But you can just make the equity beta your subject and then find it. Okay, it's basically you are rearranging it. Making equity beta the subject and finding equity beta. This is for finding asset beta, but we have the asset beta. We are using this to find equity beta. In case you forgot the formula, you can use this. Okay, just rearrange and find equity beta. That's it. But the good thing is if you remember the formula for equity beta, that's very good thing. In case I always suggest my students to memorize the formula. Why? Because it's very fast when you're doing calculation. Imagine how much time you're taking referring back to the formula, seeing one by one. Okay, opening the formula sheet, seeing and then inputting the answer. It takes a lot of time. It wastes a lot of. If you remember, you will be very fast. Okay. So now, what is the? How do I start on this? Hmm? You have your asset beta. You have your asset beta. What is asset beta? Where is asset beta? 1.21. 1.21. Forget about the weightings. Forget about the weightings now. Weightings will come later. First, you are using this 1.21. Okay. Because why is it that? Why is it that you are not using the weighting? You should not use the weighting also at all. Why? Look at it. The weighting, okay, they say asset beta formal clothing division. So formal clothing division retains already with new member. Before demerger also, after demerger also. What are you selling after demerger? You are selling sports division. To whom? To whom are you selling? To Poinance. When you are finding the value for Poinance in that time, okay, in that case, then you have to use this weightings, okay, 60% and 40%. Not for the new members. You don't have to use because you are using this only formal clothing division. This is wholly for the clothing division. Okay. So you can use 1.21 as it is. Okay. So equal to asset beta 1.21. Okay. This is the formula for equity beta. 1.21 into asset beta into what? Market value of equity plus market value of debt. Did you see we didn't find the market value of debt? We are using the old market value of debt. Why is it? Because if you see the financial information, they didn't mention anything about debt. They just told the liability for 200 million loan notes will be remaining with the new member. So this 200 million note is this one only they are talking about. So that means this 200 loan notes, whatever market value of debt we found out, will be the same. It will be retained. Nothing will change. There is no change in debt. Debt will remain with them. So you can use the same debt. Only market value of equity capitalization is changed. So you are taking this to 20 only. This to 20. This is an advantage if you have input all those variables like this. You can use it wherever you want. You don't have to type each type. Okay. So 220. Okay. What is next? 220. You cannot take 220 as it is. You need to multiply this after tax, 1 minus tax. We have already taken 72%. You need to divide the whole thing by 351. Okay, close bracket, divide by 351. Why 351? Because the formula says so. Enter. Press enter. Okay. Definitely something is wrong here because that's not supposed to be. Okay. The reason why this is wrong is, okay, because it needs to divide by whole. They are taking this. So the formula is, okay, you need to okay, 1.21. I forgot to multiply by the cost of asset beta, sorry. You need to multiply this by asset beta equal to 1.21. Multiply. You need to multiply by the asset beta 1.21 inside the bracket and then divide by this. Okay. So this is the correct answer because I forgot this 1.21. Okay. Always check here. It will tell you what variables you are missing in case you might miss out on one number. Okay. So this will take it to 2 decimal places. Round to. If your spelling is wrong, it will not perform. Okay. This round to 2 decimal places. 1.76. Okay. This technically you will know whether you are correct or not logically. Okay. There's a way to understand whether this is correct or not. Because this has to be greater than 1.21 because a asset beta is always less than equity beta. Okay, asset beta is 1.21, equity beta is 1.76. So it makes sense that this is correct. Next, what is the next? From here, you have found the equity beta. What else? Once you find the equity beta, next always is cost of equity. No doubt about it. So it is KE. KE means cost of equity. So in KE, what should you use? The CAPM formula. Okay. So the risk-free rate was 3. Okay, equal to risk-free rate was 3.5% plus cost of equity into risk premium. What is the risk premium? 6% or 6. Enter. If you see and round this to take cost of equity and cost of debt always in as a whole number. So it's 14%. That means cost of equity is 14%. So now once you find the cost of equity, now you can find the WACC. Because you have cost of equity, you have market value of equity, you have cost of debt, you have market value of debt. And after tax, all these 4 things you need to find WACC. Cost of equity, cost of debt, market value of equity, market value of debt. Okay. Now enter equal to. What is it? Market value of equity multiply by cost of equity. Don't take as 14. Okay, we'll take this as percentage. Okay, don't forget to take this as a percentage. Sorry, let's just go to the cell, go to the percentage sign and take 40. Okay, so when you're taking this, okay, we'll You can take it as 0.14. Because if you take this as percentage, it will come as 100 and 1400. Okay. So WACC equal to 351 multiplied by 14%. Okay. You can take 14%. Close bracket plus again a bracket. Market value of debt is still the same. It will be 220. Multiply by cost of debt. What is cost of debt? It will be 4.5% only as before. So 4.5%. Multiply by after tax. It is 72%. Okay. Now when you see this thing, if you take divide by the total market value of equity plus debt, it will only divide it by this part. Okay. But you need to divide it by the whole amount. So how are you going to do it? Just separately you have to do it. Divide by, what is it? 351 plus 220. Because the new market value of equity is 351 and the market value of debt is 220. Add both and the total is 585. Sorry, 571. Okay. So individually you have to divide it. 571. In this case also you need to divide by 571. Enter. Just press enter. Now round this to 1 decimal place. Sorry. First you have to take this one in terms of percentage. Okay. So it will be 9.9%. Okay. If you are taking this one in 1 decimal place, take this one also in 1 decimal place. So if you see, this is 9.9% and this was 9.5%. There is an increase of 0.4%. So just write the new WACC, 9.9%. Okay. You can even show the decrease. Okay. So you can even write it. And an increase of 0.4%. Increase by 0.4%. You can show how that increases. Okay. 9.9 minus 9.5. So this much will be enough. Okay. Next part is what? So we are over with the new member company. Now moving to this. Again, read the requirements, whether you have answered all your questions or not. The change in the WACC of the new member of the demerger of the sportswear division takes place. Demerger of the sportswear division means we have to find the WACC of Ponnin's company also, even if they didn't ask. That's what it means. So, what is it? WACC of Ponnin's company. Now you need to use the weightings, okay? So what is the, how do you find the, for the Ponnin's? This is where you are using the proxy company's asset beta. Okay? So what is the current asset beta? Current asset beta of new. Okay, I'm just going to write new. That means the new member company. Current asset beta. What is the current asset beta? It is 1.4, right? Just go to this. Sorry, the current equity beta. You have to find the current asset beta. Okay. So now you have to use this 1.4, the equity beta of new member 1.4. Why are you using the equity beta? It's very confusing, right? Isn't it? Sometimes we are using asset beta, sometimes you are using equity beta. So you understand why we are using equity beta. See, new members current equity beta means before demerger. Okay, in this equity beta means both your financial risk and business risk is included there. Okay, that means here still you didn't demerged. Okay, you have to first find the current asset beta. That's why we are using the current equity beta, because if we are not given the current asset beta, this asset beta if you're talking about, okay, it is only for the formal clothing division. But before demerger, Nuremberg company had both formal division and sportswear in their hand. So we need the total asset beta, not just 1.21. This 1.21 is only for the formal clothing division. We cannot use it. They have given us the weightings, but weightings on what? What is the total asset beta? Definitely it will be greater than this. Okay. That means clothing division plus sportswear. When both are together, what is the asset beta? To find that, we have to use the equity beta. See, if equity beta is given, you can find asset beta. If asset beta is there, you can find equity beta. They have a relationship like that. Okay. You need the current asset beta because the weightings are given for asset beta 60% and 40%. How do you find the asset beta? By using the current equity beta, which is 1.4 of new member before demerging. Then only you can find after demerging. Okay. So let us go down. Now, the formula is asset beta is equity beta is 1.4. Okay, multiply by, what is it? 585. That is the market value of equity. Which equity you are taking? Old equity. Old equity. Currently you are finding no current. Divide by. Again you have to put a bracket, okay? So again it is 585. Sorry, just. Okay, so I've missed it out. It went that side, again I have to do it. 1.4 multiply by 585. Or you can even write it here. Here itself you can write it. 585 divided by, again bracket. Again you are pressing 585 plus the market value of debt. It will be 220. Okay. 220 into what? 220 into after tax 72%. Okay. Close bracket, enter. What is it? Current asset beta. You are getting it. So round this up also. You can manually take it also, or you can use 1. Sorry. Just undo. Okay. You need to put equal sign. That's why the function didn't work. Equal to 1. Because I wanted to round it up to 1 decimal place. Because even my equity beta was 1 decimal place. So 1.1. Sorry, 2 decimal place. Okay. If I press 2, it will still come as 1.1. Because 1.10, they will not take that 0. It does not matter. Next. What is the beta of point in company? We have to. There are now 2 companies. Remember, this is reconstruction. Demerge means 2 companies. One is point, one is new company. I would say new. Okay. New member, new. Okay. So 2 companies. Now you have to separate it. This current asset beta includes both the company together. You have to separate this out. Okay. So it will be beta. You don't have that symbol, so just write beta of P company, that is Points company. Okay, you just have to find for the Points company the demerged part. How do you do this? How do you do that? Hmm? If I write it, you will not be able to understand. But okay, I can just show it in the word processor. How it comes, I'm going to erase it off later on. This is just for your understanding purpose I'm showing. Because later on you will understand the calculation, why it is like this. Okay. You are taking two division now. One is sports, formal clothing. The other one is sports division. Let us look. If you see, we have been given for the formal clothing division 60%. So for formal clothing division, the asset beta is 1.21. Weighting is also given. Asset beta is also given. So it will be 1.21 multiplied by 60%, no, 0.6 plus what is for the sportswear division, what is the rating weighting? 40%. Okay, 0.4. Okay, let put bracket. This you don't have to show. This is I'm explaining you, because when I do the working you will not understand why I divided, why I multiplied. 0.4x. What is the asset beta of just sportswear division? Do you have it? We don't have. That's what we have to find out. Or let us name it as y. Okay, because if I put x you will get confused. Okay, let us put it as y. That variable is y. We don't know. We don't have the asset beta of just sportswear division. Equal to, but we have the total asset beta. Total asset beta of both clothing and sportswear is what? Just now we found out. This 1.1. It is the total asset beta. That's why we use the current equity beta. Do you understand now? Why we use that current equity beta to find current asset beta? Using that we'll find the asset beta for sportswear division. Sportswear division is under the control of whom? Points company. The one demerged. Now, just make the y the subject of the equation. That's it. Basically, you should know maths here. That's it. So it will be y. So this is like I'm teaching you maths now rather than ACC. Okay. Never mind. Maths is also a favorite subject of mine. So, okay. But, okay. So 1.21 into 0.6. It is 0.726. Or what you can do is, okay. Sorry, wait. 0.4y. Bring y on one side equal to 1.1 minus, take this the other side, into 0.6. Okay. So now you just want to find y. It will be equal to 1.1 minus in bracket 1.21 into 0.6. Divide, okay, divide the whole thing by 0.4. Okay. So now you will be able to understand why we have, what are we finding and why we are using this 1.1 minus 1.21 into 0.6 divided by 0.4. Exactly same thing we are doing in the Excel. That is the reason I started showing you this. Otherwise you will not understand when I do in the Excel. Why I multiplied by 0.6, why I divided. Okay. But in the exam you don't do this. Okay. This is just for your understanding purpose. I'm explaining it. Now, so beta for P company is what? Asset beta of sportswear. So it will be equal to 1.1 minus, still okay, exactly what I did in the word, minus 0.6 multiply by 1.21 divided by 0.4. See, This is why you need to practice. You should make mistakes and learn. You should do this error. Then it will tell you that you should not do all this. Why that minus thing came? Because somewhere I missed something, right? So what should I do? Close the bracket here. Divide it by 0.4. Sorry, divide by 0.4. Nope, it's not working. Definitely, first of all, you should get beta always a positive number, right? So this shows that you need to be a pro in Excel. Let's put double bracket. Enter. Okay, if you put double bracket, it will not work out. So this also, you can do it. If Excel is not working in this case, the second solution is use calculator. That's it. Without wasting time. There's no time for you to waste. Clear. 1.1 minus bracket 0.6 into 1.21 close bracket divide by 0.4. Divide by 0.4. Enter. It is minus 0.71. So definitely, if you are getting such signs where you are not getting it right, and the first instance, what can you do? Break down it. Don't waste time. Just break down and do. Okay, that means 0.6 multiply by 1.21. 0.726. Okay. So what was the mistake? What's happening? You know what was the mistake? When I did this, they are dividing it. But first you have to minus 1.1 by this. 0.726. Then you divide by 0.4. That was the mistake which is happening. It's 0.935. Okay. What we did was, okay, I will show here. It is 1.1, sorry, equal to 1.1 minus 0.6 into 1.21 close bracket divide by 0.4. So when you are taking this, what they are doing is they are taking the multiplication, dividing the amount, then they are minusing it by 1.1, which is, that's why you are getting a negative answer. But it should be this way. The numerator 1.1 minus the amount inside the bracket divide by 0.4. Division is at the end. This is the reason when you have such calculations where you need to divide also, multiply also, add also, do step by step. Without wasting time doing again and again and again, you need to find ways of doing it. Okay, so now it is 0.935. 0.935. Okay, I'm just going to put it. So now, what next? We have the beta for this. What else do we need? WACC. How do we find the WACC? How do we find the WACC? This is equity beta, if you see. Why aren't we finding the beta for the debt? It is assumed to be 0. We only need the equity beta. Okay. In WACC, now be careful. This is something new which you are going to see. You are using capital asset pricing model. You are not taking debt, market value of debt into cost of debt plus market value of equity into cost of equity. Why? First, let me do it and show. Okay, it is 3.4%. Or just take 3.4 plus. This is the risk-free rate into. Okay, this cost of equity into 6. Because that is the market risk premium. Enter. So 9.01. Okay, it will be 9%. But other WACCs which we did, we took the market value, just see how long the equation was. We took after tax, debt and all. Why we didn't take debt over here is the question. Because when you read the financial information, what did they say about the Points company? This is very important. Okay, Points will have no long-term debt. Liability remains with new member company. So there is no use of you to find market value of debt and cost of debt for Points. Only equity is there, that's it. So when only equity is there, your cost of equity will be WACC, that's it. No debt, no. So your cost of equity itself is the WACC. So capital asset pricing model you use find equity, that only is the WACC. That is known as WACC, that's it. 9%. You need to put in this word, okay? Points company WACC. What is it? 9%. Make sure that this is put. Okay. What's next? What is next? So the next first requirement you have answered. Second requirement, valuation using free cash flow. Definitely Excel. You need to draw cash flow for how many years? 3 years. First year, second year, third year. Fourth year not needed. So now let us use, okay. Make a mention also which it is for first requirement. Still we in that requirement only. Which requirement? Part B, second requirement. So free FCF, you can write FCF for free cash flow. The short form is understood, okay, for P company. Now, how you do net present value? Quickly like that setup, okay, here 1, 2, 3. You need to be very, very quick, okay. Dollar, million, write the currency. And if you're taking it in millions, then put on top. Okay, just drag it to the other cells. If you want to do any formatting, do it. This is the right time to do it. So now you are starting with what? What are you starting with? Operating cash flows. You always start with operating cash flow. Okay, never mind. Don't make spelling mistakes, but my spelling is wrong here. It's okay, never mind. If I go to correct those, it will take a lot of extra time. And I don't want to waste your time because I know each time, each minute for you is now very precious. So the spelling mistake is nothing. What is important is you have to understand the concept, how to do it, and how to use the tools. Okay, Excel, calculator, and all. So operating cash flow financial information, they told it is 36 million, but in the first year you have to inflate it by 25%. Okay, so how do you do that? You can do it in the calculator. 36 into 1.0025, or you can take it here also, equal to 36 into 1.25%, because 25%, it will be 0.45. It is supposed to be 45, but just give me a time. 25%. Don't take percent, just multiply by 1.25. Okay, 45. Next year, whenever inflation is same, you can just drag it and copy paste to the other cells, but here you cannot do that. Here you need to do individually for the 3 years. Why? Because the rates are different. Okay, the inflation is different for each year, so you cannot take 20%. So here spreadsheet, here when you are taking it 20% on what, on this. So here when you are taking it this into 20%, 1.2. On the previous year one you have to inflate it. Next, what is the 15%? Okay, 15% on what? On this you are taking 15%, multiply by 1.15. Sorry, multiply by 1.15 into 62.1. Now tax. After operating cash flow is tax. Tax 28%. So tax you don't have to worry. Just take 28 multiply by this. This you can drag it to the other cells because each year tax is 28% only. Okay. Next, post-tax cash flow. After tax, okay? Or you can write after tax cash flows. Just deduct the tax and you can just drag it to the other cells. Next, your investment. Once you get your post-tax cash flow, next comes is your investment. Investment in assets, okay? What is it? What is the investment? We need to see the financial information. The sportswear division managers believe that Pernix will require 20 million in investment of additional assets in year 1, rising to 22. Rising to 22. There is a difference, okay? Rising by and rising to. This is a mistake most of you do. You have to understand the word to or whether it's by. If it's to, that means it's 22 million. If it's by, then you have to add 22 with 20. Okay? Rising to 22 million in each of the years 2 and 3. So 2 and 3, 22, 22. And 25 million annually from year 5 onwards. So here it will be, first year it is 20 and 2 and 3 it is 22. Understanding the sentence, interpreting it correctly also is very important. 22, 22. Okay. You can either put minus also in front of it if you want to show in minus. Okay. Then you have to use a sum function for post-tax cash flows and all if you are using minus. Next it is free cash flow. Free cash flow, you can write FCF. How do you find the free cash flow? Simply your post-tax cash flows minus your investment. Drag it to the other cells. Next, what do you have? Discount factor. You can write DF. Make sure that you write what is the discount factor. What discount factor are you using? This is whose? P's. For P, what was the discount factor? Just now we saw it's 9%. Whatever you have calculated previously, here you're using it. That's why it's very important that you know how to find cost of capital. Because if a cost of capital or WACC, whatever you call it, goes wrong, the valuation of free cash flow, valuation, everything will go wrong. Because everything depends on the cost of capital, okay? 9%. For 9%, just go to the formula sheet, go to the discount, the present value table, go to the 9%, and for the first 3 years, it is this 3 rates, okay? 0.917, 0.842, 0.772. Don't waste time doing it manually, okay? Wherever you can take rates from, just take it. Wherever you need to calculate it, then do it. Sometimes it's good that you look at the formula and copy paste rather than doing it manually, even though that there is a way of doing it manually also. That is only when you have a discount factor like 4.5% or 3.6, like that, decimal places, okay? Now discounted cash flow. Discounted cash flow. So discounted cash flow will be simply your free cash flow multiplied by your discount factor. And this you can drag it to the other cells. Okay, if you need to see the whole number, okay? When you cannot see, you have to expand the cell. So What is the discounted free cash flow from year 1 to year 3? You need to write from which year to which year. Okay, it is simply use the sum function. The sum function you need to use and just add all this. Okay, now the next is what? Discounted. You have to find from 4 year onwards. Don't forget about it. Always. Free cash flow is given. You will always be given at the end from 3 year onwards, from 4 year onwards. That terminal, it is known as terminal value. That also you need to find out. Don't stop after year 3. So it is discounted post tax, after tax. Okay, post tax cash flows CF from year 4 onwards, to show that it's forever. You're writing from year 4 onwards. Don't just write year 4. If you're writing year 4, it shows that only for 1 year on year 4. You have to write 4 year onwards. It means forever. Okay. So here, what do you have to use? You have to use the dividend valuation model, that one. So it will be this free cash flow into 1 plus the growth rate. What is the growth rate? 2%. 2%. Okay, you are using what? We don't know what we are using for free cash flow, right? We are using the discount valuation model. Okay, if you forgot it, in case you forgot the formula, let me take you there also. It is this, we are using it. Instead of dividend, we are using free cash flow. So free cash flow into 1 plus the growth rate divided by cost of equity minus growth rate. Okay, 2%. So it will be 2% divided by what? See, cost of equity WACC is same for the Points company because there is no debt. So we can use the 9%, right? So 9%, sorry, 9% minus 2%, right? Because debt is, sorry, growth is what? Growth is 2% only. Enter. Okay. If you put enter, if you see, no, this is wrong. Why? They first need to multiply and divide. What they did was, I think they divided this two, then they have multiplied. So in this case, what do you have to do? Again, do it individually. Take this first and then divide this by, sorry, take this, then divide this by 9% minus 2%. No, they have taken it correctly, but something is wrong because here okay. So what we did here was correct before. Now I understand the mistake. You divided, you continue to divide it, okay? Divided by 9% minus 2%. Close bracket, enter. The problem came here was this. It is not the discount factor from 1 year to 3 year which you have to take. You have to take this one. Post-tax cash flow, the third year's post-tax cash flow. Okay, because from then onwards it will increase by 2%. That's why you have to take always the last year's cash flow, whatever the last year in your case. In this case, this is the third year's. This, okay, enter. So now this is the more correct method. Okay, 44.7. Next, this is not enough. You need to discount this back to year 0. This is on fourth year, means from here onwards. All this year you need to discount back to 0. So which discount factor are you using it to discount? Simply this multiply by always the last year's discount factor. Okay, next, what is next? What is the next thing you have to do? Don't forget that there is an investment of 25 million annually from year 4 onwards. Now you see, it's very easy when you are doing such calculations. So many things to calculate. It's very easy for you to get lost in between and lose the track. Like you don't know what you might miss out on this thing. It's very easy to miss out things which can change your whole answer. That's why it's very important that you keep on checking, revisiting, and see whether everything you have taken, every piece of information is taken or not. So this 25 million, don't forget that. Some of you might stop at this stage also and start valuing it. No, you have to take the discounted investment in year 4. What is it? Discounted investment in assets year 4 onwards. Okay, don't write discounted investment in year 4. You have to write the word onwards to show that it's forever. What is it? It is 25 million, right? It was 25, so equal to 25 divide by what? You need to divide by what? Here, remember, this you will not increase it, this 25 million. Okay, just look at this again. They have just told 25 million annually thereafter. That means this will not increase further. There's no increase. That's why we are not finding increase. So when it's constant, there is no increase, there is no growth. You divide simply divided by cost of equity. Okay. So here in this case, cost of equity or WACC, whatever, it is 9%. So take 0.09%. This is the formula. Okay. When there is no growth, you simply divide it by cost of equity. That's it. And you need to multiply this. You can do step by step or in one go. Let me do it in one go. You have to multiply this by what? You have to take this third year's discount factor. Always. Now comes the valuation. Whose valuation? P company. Okay. Always write, mention the company whose valuation you are doing. How do you find the value? Okay. So the valuation is simply discounted cash flow from year 1 to 3 plus this one, discounted post-tax cash flow from year 4 onwards minus this, because it's an investment in assets. So this is the valuation. Now it's a very big number. What can you do? Round up. Don't take this whole number and put it in the word. Okay, you can take it as a whole number, you can take it to one decimal place. Let us take it as a whole number, 332. So this is the valuation, 332 million. Okay, so now let us go to the word and write copy paste. Here it's not WACC, here it's valuation. What is their valuation? It is 332 million. So dollar 332 M. Write the currency and write it. It's in millions. Don't just write 332. Okay, now again go to the requirement and keep checking. Valuation of point is using free cash flow. Exactly we have done. Based on the information and assumptions given and briefly discuss your results. Don't forget this part. 15 marks is there. You need to discuss also now. So calculation part, we are over with the calculation part. Okay, that's a good news. The bad news. Okay, not a bad news, but yes, definitely most students don't like the discussion part because they feel discussion is more harder than actually doing the calculation, the long, heavy calculations. Okay, so I'm going to close this off. Now I'm going to do. So when you're writing discussion, you need to write it in word and you need to label it as discussion. This shows that you're going to discuss this. Okay, now what's your discussion? How are you going to start? From which area do you start discussing? I give you 1 minute to think on that. Think. 1 minute I'm giving you. Think, where do you start your discussion? From which area? No, there are many ways of discussing the same thing. You can start by talking about the valuation. You can start talking about what happened to the cost of capital, why it went up. All these things only basically you have to discuss because they told discuss your results. They didn't tell what areas you need to discuss. That is the disadvantage of discussion. Examiner never clarifies what exactly you need to discuss. They just say discuss your results. Discuss your results is an open-ended question. Now, how do students know what to discuss? What exactly to discuss? This is why you're losing marks. You're discussing all the unwanted, unrelevant things, but not discussing to the point what is actually they are asking. Please understand the examiner's mind. They're asking you discuss your results means what results? We found WACC, we found the valuation. So discussing means we're saying why the WACC increased. Why that WACC increased? So when why that WACC increased, so many points come up. What are those points? We are talking about equity beta, we are talking about asset beta, we are saying when company disposed, demerged, what happened to the value? What are the advantages, disadvantages of doing it, of demerging? What could be the advantage of not demerging it? What are the disadvantages of demerging it? We are talking about the financial risk, we are talking about the business risk also. Now you need to read. Definitely this we have gone through, right? You need to discuss the first exhibit and the two exhibit. Now when you're discussing, this is the point you need to read your whole exhibit. This will help you to discuss it further. This will tell you about the business more in detail. So with your calculation and with their exhibits, combine and you discuss. Okay, let us read. So since this is my last video for AFM, like for a revision, from revision perspective, so I don't think if I take a little bit more time of yours, it will be any doing any damage, right? So we can do it since I will also be missing this revision classes and all. Okay, so New Ember is a listed company which has always been manufactured former clothing for adults and children. It obtained a listing 10 years ago after years of steady growth. 70% of shares in company are owned by its directors. Remaining 30% is owned by external investors. Sportswear division. 8 years ago, it set up a division to manufacture sportswear. The investment has been very successful and the sportswear division now accounts for 40% of total group revenue, having grown much quicker than the original formula. This you can use for your discussion. That they have grown more than the clothing division also. Okay. Next. New members board has given divisional management of the Sportswear division more authority over time, although the board has continued to make major policy and investment decisions relating to the division. Initially, relations between new members and the management of the Sportswear division were good, but there have been problems over the last couple of years. You saw that there was a management buyout and they are selling to management, but they have problems. The Sportswear division's management has been frustrated by the board's refusal to approve their recent investment plans. They had been frustrated by the board's refusal to approve the recent investment plans on the grounds that they were too risky. You can talk about risk. You can talk about the profitability. You can talk about the liquidity position. All these things we can discuss. So in order to achieve operational efficiencies, the Sportswear division's management would also like to pursue stricter policies for managing operational staff and policies than numerous board has so far allowed. In addition, new member started to prepare an integrated report 3 years ago, but new company's board has had difficulties in obtaining all the information it requires for the report from the Sportswear division. These things you can this is for your last requirement. Okay, now coming to the restructuring. So we have read that they are going to be demerged, right? And it's a management buyout and all those things. So just close out. Okay, you can start talking about cost of capital. It increased, this happened, that happened, or valuation, whatever. So in the marking scheme they have started with valuation, so I'm also going to go in that order. Okay, what they have told: if the manager's estimate of the sportswear division's future free cash flows are realistic, then the valuation using the free cash flow exceeds the current valuation. Okay, definitely I'm not going to write the discussion, but I'm going to read it out for you and explain you also what each point means and how it is relevant. So they're talking about estimation. When we valued a company, what did we use? We use free cash flow. Okay, open up the free cash flow for you. We used a free cash flow. This free cash flow, do you think is realistic? Because we valued our company using that. So you have to question. Basically, in discussion, you're questioning it, especially when it's valuation and all. You're questioning the valuation because for valuing we used a lot of assumptions. They didn't happen in reality. So free cash flow. First point they are saying this is based on assumptions. It's not realistic. Okay, but let's assume this is real. Really, this is happening. Okay, then the valuation exceeds the current valuation. Okay, valuation exists, current valuation. I'm just writing some points for you, but you need to write it in sentence. For that, you need to actually read the answer. Okay, I cannot help you on that. So valuation exists, current valuation. Why? What is the valuation? I'm just going to write it here in bracket. The valuation was 332 based on the free cash flow. But what is the current valuation? Assuming, see, whenever you write assumptions, okay, wherever you are using, definitely valuation, always valuation question assumptions are used. Investment appraisal valuations are used. Okay, so in that case, when you discuss also, discussion is always similar. When you see the answers, is always they're talking about assumption, estimate. So how do you start? You start by writing that if the assumption, it is based on assumptions, valuation, free cash flow and all. Okay, if the assumptions are correct, then based on that valuation, this is the valuation and it exists the current valuation. This is your first line. What is the current valuation? Current market capitalization was 585. Now it is 351. New market capitalization. So just take the difference. 585 minus 351. This you can show in term inside the bracket, okay, when you're writing also. What is it? 234 million. So dollar 234, okay, it is 230, I'm sorry, 230, sorry, 234. Do you see? So valuation used, valuation based on free cash flow is 332, but actually the current is 234. It exists. That means it's good, right? if it's realistic, provided estimates are realistic. Next line or next paragraph of discussion talks about the valuation is dependent upon achieving ambitious growth target in year 1 to 3. You have to talk about growth rate. I'm just writing in bullet points what each paragraph talks about. Growth rate. Definitely growth rate you have to talk about. Because the valuation is basically dependent on what the ambitious growth rate. Just look at here. Look at the growth rates. Don't you think it's too high? 25, then 20, then 15. It's reducing slowly. But if the valuation is not there, then valuation might be much lower because we inflate it, right? So, particularly given the loss of economies of scale discussed above. Particularly given the loss of, okay, let me write this sentence for you so that I can show how they have linked through various exhibits. If I tell you, you will not understand. The second paragraph. Valuation is dependent upon achieving ambitious growth targets. In years 1 to 3. Particularly given the loss of economies of scale discussed above. So valuation is dependent upon achieving ambitious growth targets in years 1 to 3. Particularly, we know that. Given the loss of economies of scale discussed above, where did they bring this point from? That's why I tell you everything from textbook is not enough. You need to use your brain also. On the exam, use common sense. Loss of economies of scale discussed above, definitely they are using the exhibits to tell that. Okay. There are problems with economies of scale as discussed above. So reading all this will tell you that there are some issues with economies of scale and all. Right? That's why they're having issues with operational efficiency and all those things. So how they have linked this with exhibit 1. That's why it's important that you read information given to you. Especially when it's for discussion part, when you need to discuss. This is how you link and this is how you have to talk. Both in terms of financial and non-financial perspective, okay? What is the next? They're talking more on this point, okay, which I'm not writing, but I'll be telling you what they told. The board and the shareholders of new company would want details about the assumptions. Definitely, they want detail about the assumptions behind this figures, particularly as growth after that is only assumed to be 2%. So you're saying that board and shareholders of new will need information. What information? That on what assumption they have taken this growth rate. Is it clear? Is it clear from the exhibit given to you? No. So these things you need to write in your discussion. And hereafter it's 2%. Where is 15% and where is 2%? Every year it's reducing by 5%. But when it came 4 year, why the growth rate went so down? All these things challenge, you need to question, okay? What is the assumption? Basically in discussion you are questioning the assumptions only, okay? So the valuation is also whatever the factors the valuation is dependent on, you need to talk about all the factors. All the factors means whatever you can remember. So the valuation is also dependent upon the investment figure being accurate. Definitely this investment figures being accurate, valuation depends on that also. When you go to because valuation, when we took, let us open the spreadsheet. What did we do in the valuation? We minus the investment. So if this also changes by a bigger amount, your valuation will go up or go down, changes. Basically whatever the figure you have used, wherever assumptions you have used in valuing, you are talking about that. Like in this case, you're talking about the growth rate, how it increased, and then you're talking about the investment, then you're talking about the growth radius. Next, you can even talk about this also, the 9%. What is it? Cost of capital. Okay. So basically 3 areas they're talking about. So here also shareholders and directors again need more detail so that they can decide whether the extra investment is likely to generate increased cash flow predicted. See, they have predicted that cash flow will increase. That's why they are doing investment, additional investment. But will the additional investment justify? What if the cash flow in the future is not coming and you have invested now? So all the things you need more details to see all this. That's what you're discussing. Third paragraph talks about they would also want to determine how the managers of the sportswear division plan to fund the investment. Definitely, when it's a reconstruction, remember, when it's a management buyout, you need to see whether your managers can actually fund the investment or not, whether they can actually they have enough fund to take the sportswear division from you or not. Particularly if initial operating cash flows are not as high as expected. If your operating cash flow in the beginning is not high, first year, definitely. See, definitely when you managers also think logically, this is not AFM. When managers or anyone takes a business, day one, no one gets very high cash flow revenue. It is not, right? It takes time for you to get that high revenue. So initial years, they will struggle a lot to finance the investment. That's why that's a question. All these are logical question, common sense question, nothing from AFM. Okay, that how they are going to finance this, especially for reconstruction question when they are asking, even for acquisition and merger also, how they are going to finance the investment. This points needs to be discussed. Okay, I think somewhere they have told that managers are having issue also. Okay, that somewhere they were not able to get or somewhere, I don't remember, but just check out for that. Sometimes managers do not have enough funds. Okay, next, the last point, definitely WACC. So the restructuring will lead to marginal increase in the WACC. So last point they are talking about WACC, that increased in WACC from 9.4 to 9.9%. Sorry, 9.5 to 9.9%. So the restructuring will lead to marginal increase in WACC of new Ember as the financial risk increases with more. Now, very important point. Whenever you discuss something increase, I've told you in ratios also, when I discussed ratios, when something increases or decreases, don't say it increase or decrease so it's bad for the company or it's good for the company. I told you give reasons. What could be the reason for the increase in the WACC? Either your business risk increased, either your financial risk increased. So here they have given in the answer, as the financial risk increases with more gearing. They told that financial risk increases with more gearing. So the directors may be worried that new member credit rating will fall. You see how they're discussing? This is not something in the case study also. This is not something in AFM also. Nothing, nowhere. You are writing it from your own creativity or your own mind, your own thinking. The directors may be worried that the new Imber company's credit rating will fall. They are linking this to the credit rating. Why? Because cost of capital increases, your credit rating will fall down. There's a inversely this relationship is there. Definitely directors may be worried if cost of capital increases, because financial risk is increasing because of high gearing. If gearing is there, you are considered highly risky. Therefore, your credit rating might fall down. So all these things are there in discussion. Okay. Or it could be your business risk also, which increased. Right? But definitely WACC. Okay. This is, I'm explaining WACC more. Okay, I'm done with it. So I won't take so much of time of yours. I know that already it's 2 hours, but then These things needs to be talked about, guys. Right? I cannot miss this out. It's for your own benefit. You need WACC everywhere. Cost of capital, equity, and everything. So, what was I saying? I was saying that WACC, business risk, and financial risk. Okay. Let us close all this. Okay. Let us just open the spreadsheet. Okay. WACC can increase because of financial risk and business risk. Now I'm going to talk in terms of financial risk. Understand this. Why it is so? How do you understand it also? See, when you're taking WACC, okay, initially when you took WACC, you took cost of equity also, cost of debt also. Because of that debt has interest, and that interest is tax deductible. You deduct tax also from that. Do you see? So that reduces your WACC. But when you took for the Poinese company, I don't know how to pronounce it, whatever it is, the P company, where was it? This. There is only equity. There is no debt in that. So if no debt is there, you don't get that benefit of tax. You have a tax benefit if you had a debt, because your debt is always cost lower than your equity because of tax. It is tax deductible, your debt. So when you are having, if even if our equity is high, cost of equity, if you are having an amount of debt in that, lower debt, it brings down your WACC. Now there is no debt, only equity. So you cannot take the advantage of having debt. If you have debt, you will have the advantage of tax also. Interest is tax deductible. So that is one form of financial risk you can talk about when you are talking about debt. The other area is business risk. How do you discuss business risk? How do you identify the business risk? It is through your asset beta and equity beta. Asset beta and equity beta. Look at the asset beta and equity beta. Okay. Just where was it? Okay. So here, this was the asset beta. This is the equity beta. Okay. Now see what's the new asset beta and the new equity beta. Compare it and see. So this was your what is it? Asset beta. Okay. Asset beta is now 1.1. Before it was 1.21. Before your asset beta was 1.21. Now your asset beta is 1.1. It fell down. It fell down means business risk reduced. That's why in the answer also you will see they didn't mention about business risk because it reduced. It reduced. Okay. And your other one is equity beta. Equity beta also includes financial risk also. Look at equity beta. Equity beta is 1.76. Okay. Before your equity beta was what? For that, wait. Before it was 1.4. If I remember it, just look. The equity beta talks about the financial risk. If you see the asset beta fell down, so that's why they didn't mention about business risk. But in some cases, even the business risk also, asset beta also increases. That's why the cost of capital goes up. So equity beta was 1.4, but now the equity beta is 1.76. Do you see it increased? 1.4 to 1.76. Equity beta increases means financial risk increased. That's why they have talked about business risk, financial risk and gearing and all. Okay. This is the way you see your financial and business risk if you want to comment on it. Okay. So with this, I have finished. And now if you see the word plus word, okay, especially when lots of calculations are required and when you have to put in the word, you don't have to put all the calculations you can do in the spreadsheet, but when you do spreadsheet calculations, don't do it in a haphazard way. Do it neatly. It should be understood. Like when I did in the spreadsheet, it is understood what this means, what this means. It is one after the other. I've wrote all the variables, right? So it is something I understood. When I took in the word, I didn't take everything. I just took the main answers. The WACC, the current and the new WACC, and the finance company's new WACC, the valuation, and then I discussed. That's it. Because how do I understand what I take in the word? Is just simple. Just look at the requirements. Whatever the requirement asks, only that you will take in the word. If there are calculations and all. But if you have to write in the word for theory answers and all, like part A and C, there is no such thing Excel. You are writing in word also, word only. Okay. Because imagine if this all these calculations you are doing it in the word, you are writing it, and then you are using calculator to do it, it will take so much of your time. That's why use Excel for calculation. Unless the calculation is 1 plus 1 or it's very small, there you can use word. There you don't need spreadsheet to do, or you can use a calculator also. Okay, so part B is over. And so it's written here also why valuation using based on information and assumptions given. That's why you're talking about assumptions and information. Briefly discuss. Okay, when they say the word briefly, just give 3 to 4 points. It's enough. Don't give 10-20 points. Don't write 10-20 paragraphs. Okay, because definitely a lot of your marks already went for calculation, this and this. So for the result part, maybe around 4 to 5 marks will be given. So let's say that 10 marks is for calculation and 5 marks is for discussing results. Okay, now coming to part C. Part C, I'm not writing the answer, but it's important because most of you ask me how to write a theory part, theory question, right? So they say discuss the factor which may determine the policies P company should adopt for communication of information to its shareholders and other significant stakeholders, which determine that they should adopt the communication, how they are going to communicate to the shareholders and the other significant stakeholders. Okay, what they have written in the answer, I'm just going to say the main point. One is requirement for business review. Okay, they might want to review the business. That's why they might want to communicate to shareholders. The other one is communication with stakeholders. And the third paragraph, use of integrated reporting. You have to talk about use of integrated reporting. Why are you talking about integrated reporting here? How do you know that you have to talk about integrated reporting here? You have to make the use of all the exhibits. If some term is given in exhibits, make sure it's there in your answer. If you see here, not in this one, the first exhibit, they have mentioned about integrated reporting somewhere, right? Somewhere I've written, somewhere I just now I read. So this is what happens when you don't highlight. You forget what you, yes. In addition, you started to prepare an integrated reporting 3 years ago. Okay, so you have to talk about integrated reporting. That's why it's mentioned in the exhibit. Definitely in one of the requirements, even if they clearly don't ask that integrated reporting, but you have to talk about integrated reporting. It is there in the exhibit. But part A, this type of theory is easy. Advantage and disadvantage is clear. Advantage and disadvantages of demerging. But again, when you talk about advantages and disadvantages of demerging, make sure that you talk about these points that they are having issues. Therefore, selling it to the management, whether it will be good or not, all these things you need to talk about. Okay, in this case, they have issues with the management. So that could be a disadvantage of demerging. Other thing is, we saw WACC increased, right? Other thing, revenue. Maybe your revenue, you're producing more in the sportswear division, even better than clothing division. So it will be harmful. So all these things are disadvantages. Advantages could be what? Of demerging, right? So textbook knowledge, yes, but link with the case study based on what you read in exhibit 1. Definitely exhibit 1 only. Other two you don't need also because that is the first requirement, right? And it's for 5 marks. So at least 2 advantages or 3 disadvantages or 3 advantages and 2 disadvantages, like that you divide. It should be balanced. Okay, your answer always, it should be balanced. try to keep answer balanced. Don't answer one point in detail and one and other points you're not saying also so much. It should not be like that. When you're discussing points, let's say you are giving 4-5 points, you need to discuss the 4-5 points in the same length, the same manner. It's not that one point you're writing so much of detail, the other 4 points you are writing just one line. That should not be the case. So with this, I finished reconstructions also. Very good news that I finished all. Let me rewind, summarize what all I have covered. I have covered risk management, both currency and interest rate. I did interest rate options and swaps. Okay. In the interest rate risk management. Okay. Currency risk management I completed. I think I did forward, future, options. Then I did a question on ratios. Because ratios heavily you have to use Excel. Okay. You should know a lot of formulas and all. So I did a question on ratio. Then I did a question on investment appraisal. In investment appraisal, two separate videos are there. One is for just net present value, the other one is for adjusted present value. Then I did a question on theory questions, how to write theory questions. But definitely when I do calculation also, there also I talk about theory part. But separately for theory, I did a video on that. Then what else is remaining? Then acquisition and merge, I did a question. And then finally, this is on reconstruction and reorganization. So with this, I finished all, I have touched on all the areas from AFM for your revision. And the great news is for those who still wants more advice and more guidance for theory part, how to write. Okay, I'm coming up with a video tomorrow on theory part. Okay, what makes your answer a good answer, a moderate, an average answer, and the worst answer. Okay, you are in which category? You can see yourself in that video. You fall in which category? Okay, which will make your life more easier, a bit more easier, right? And thanks to one of my students who asked me a doubt some on theory questions, and she sent me this resource, which is a very valuable resource. So I thought that I should share this with all of you. It will benefit not only AFM students, I advise other students also can see, or whoever is giving ACCA paper. It could be financial, and it could be the P level students, it could be the F level students, right? Anyone, it is beneficial for all. So I think everyone should watch it. So with that, I officially finished my revision series. This was all my revision series. You can see all my videos in the playlist, the CBE revision series. And make sure that you have watched my other videos also. So with this, I would like to end here, and best of luck.